Good morning, everyone. I am C. Ankit Sharma, again, your income tax faculty. And we met again. This is our income from house property session. In next two sessions of today and the day after tomorrow session, we will complete the chapter income from house property. In our last sessions, we discussed about the salary topic and we completed it. Salary is a huge topic, huge, and of course, complicated also. But income from house properties comparatively to salary is very easy, not that complicated. And the best thing is, it's really important for your examination. So that is a kind of a question. Like if a question has been framed from income from house property chapter, then I personally believe you can score full marks in that numerical question. If it's 5 marks, you can score 5 out of 5 because that's an easy chapter. In our 5 heads of income, there are only 2 heads. One is income from house property and other is income from other sources. They are 2 less complicated and easy chapters. So if income from other sources and income from house property chapter, any question has been framed in your examination, you can easily crack it and can score full marks in that question. You can score full marks in every question also. But from my point of view, it's really easy to actually score full marks in these 2 chapters. So income from house property chapter, we are going to discuss. We will, of course, discuss some interesting stories. I have some stories for you, of course, some motivational story. Maybe we'll be able to discuss about my journey of becoming a CA. And of course, we will cover our whole chapter, theoretical provision, as well as numerical chapter. We will discuss all questions of the study material. But as you all know, because now we actually know each other, first of all, let's say a good morning. Let's see who are online. So Mr. Dhyanesh is, good morning, Dhyanesh. Okay, Dhyanesh has written a quote. Everything is easy when you are busy, but nothing are easy when you are lazy. It's quote and it's rhyming also. Okay, good. Well done. So Aman, good morning. Pradeep Kumar, good morning. Miss Nikita, good morning. Khushi, good morning. Harshit, good morning. Sankaran, good morning. Sapna, good morning. Anish, good morning. Hojema, good morning. Noor, good morning. G.R. Kanakaharini, good morning. Okay. Deepika, good morning. Jaha Krishna, good morning. Jyoti, good morning. Everybody having a very good morning. And Namaskar and Sasyakal and Shabba Khair. I guess Shabba Khair is good evening, I guess. Shabba, okay. And Vanakkam and Kemcho, etc. Fine. So we have done with our good morning session. Okay, Arun also good morning. Sameer, good morning. Karthik, good morning. Abhishek, Alok, Geeta, Murtaza, Neha, everybody having a very good morning, of course. And it's really good to see you. Not technically I'm able to see you, but yes, you are able to see me. So have a very good morning. And it's really good to see that you have joined the class. And I have already told you that please join the live class always. So after the good morning, of course, there are some guidelines. You all know about it, of course, because you have attended the last session. So those who are attending my class, first session, please follow these guidelines. And these are for your benefit, okay? Discipline is the key to achieve any goal in your life. Just simple guidelines you need to follow for the lectures. Notes are based on study material, which is drafted by our institute, and it's beautifully drafted by our institute. Of course, everything has been covered in that. Next is provisions are for assessment year 23-24. So we are discussing the provision for assessment year 23-24, which is relevant for your May 23 attempt for now. All queries, you can ask me any query. You can send me your queries, and I will discuss all the query after 30 or 40 minutes of our lecture. That will actually not going to break the flow of our study. Okay. Please focus during the lecture, of course, and ask queries related to topic. Try to take live lectures. Kindly download notes. I have uploaded the notes yesterday. So you must have downloaded it before the class. That's very important that you should download it. Okay. MCQ test will be there, of course. And 8th point, if anyone wanted to ask any query in Hindi, So you can ask me any query in Hindi, and for that query, I'll answer in that particular query in Hindi. Everything else will be only in English. Okay. And so you know the process. After this, I am going to share with today quote of my favorite, one of my favorite quote, which I am going to share with you, and that is the best way to predict your future. You do not need to go to anyone, any palmist, any person who believe in astrology, etc. So you do not need to go there and ask about your future. The best way to predict your future is to create it. How beautifully it has been said by the Abraham Lincoln. The best way to predict your future is to create it. If you want to predict your future, then you have to create, because nobody else is going to be there with you. You have to work hard. You have to complete your studies. You have to exploit this professional opportunities, whether by way of practice or by way of a job. So if you want to predict your future, you have to create it by yourself. So please, please, please understand these words. These are very important for your life. So I share quotes with you because I believe someday might be some quotation is going to technically impact upon your life. One quotation actually impact upon my life I had shared with you in my last session. And that was, there is no future in any job, but the future actually rests with the person who technically holds the job. So this is also a very, very beautiful quotation, which has been said by Mr. Abraham Lincoln. So now we'll move on to our today's topic, and that is income under the head house property. I personally believe that you must have downloaded these notes from the portal. I've actually tried to make notes which cover all the topic of study material, as well as they should be interesting for you. So if these are interesting for you, you might be able to get motivated to study more. And as I always said, that's very important that you should have interest in your studies. Fine. So if there is any problem in your life, the solution lies only in you. So there might be problem in everyone's life. In my life also, there's some problem. But nobody else is going to come and solve it for you. You have to find the solution. All of you are students. You might be suffering from a lot of problems in your life. Might be. But believe me, nobody is coming to solve those problems for you. Only you are the right person to solve it. You have to handle it. So in some life, there are more problem. In someone's life, there is less problem. But they are actually in everyone's life. You have to tackle it. You have to solve it. So please always remember, do not complain about your problems. But I cannot study because of this. I cannot do this because of this. I was not able to do this because of this. Because excuses are everywhere. But if you want to succeed in your life, if you want to be a chartered accountant in your life, you have to overcome those problems. Okay. So this is now income under the head house property. So this is a beautiful house. The section we are covering from here is section 22 till section 27. We have a charging section of 22. Before discussing the charging section, let me explain you what kind of income is going to be covered in this chapter. So technically, if we have a house, we all know the meaning of a house or a building, we can say. So if there's a building, income from house property include technically income which is generated out of a building. That can be a commercial, residential, etc., etc. So if you have a building, then you can earn income. And which kind of income will fall under this chapter? So a simple diagram, a simple format, a simple provision I have already made before starting the class. So that is Income Tax Act 1961. We are discussing income under the head income from house property. So now, if there is a building, then from that building, we can earn two kinds of income. One is indirect income and one is direct income. If we have a building, we can earn two kinds of income out of that building. One might be direct income and other is indirect income. Direct income, that is, one is annual value. Annual value means which will earn annually, that is regular basis. So kind of rental income we can say about it. So if your property is let out, then you will earn a regular income annually. Every year you will earn some rent. So that is the rental income which is going to be taxable under the head income from house property. So the chapter we are covering, section 22-27, will cover this kind of income in our head. One more kind of direct income can be out of the house property or a building if you sell it. That is called one-time income. Only one-time income. So if you sell your building, then the income will fall under the chapter capital gain, which you will be able to study after income from house property chapter. There will be PGBP head, business head, then capital gain, then other source of income. So you all know that there are 5 heads of income. One is salary we have done. Other is income from house property, which is actually going on. And after that, there will be business head income, capital gain income, and income from other sources. So if you have a building and if there is a one-time income that is out of sale proceed, that is going to be taxable under the capital gain chapter. The charging section is of capital gain is section 45. Okay. So we are not going to discuss this. We are going to discuss this. Now, what is indirect income? Indirect income of a building can be if you use that building for your own business or profession. So if you have a building and you are running your office or your factory or your shop from that building, then you are not earning income directly from that building, because you are technically, if running your business, then you are earning income either from the stock, the goods you are selling, or providing of services. So directly the income is earning from business out of this, but because that business is running in the premises, in the business running in that house, that building premises, so technically your building is supporting indirectly for that business, but technically there is no direct income which will fall under building head. So if direct income is going to be taxable under the income tax out of a building, there will be only 2 cases. One is annual charge value, that is rental value. Another is one-time income. So your building can also support your business to earn income, but that income will not fall under the head house property or capital gain. That is going to be actually treated under the business head. So if there is a building, why I am telling you this? Because I just need to communicate with you that which kind of income is going to be taxable under income from house property. So if there is a building and if you are getting any annual value from that building, so those provision is going to be taxable, or those income is going to be taxable under the head income from house property. So if in question it has been said that building has been sold, the amount received is 50 lakh rupees. We are not going to do anything of that income under our income from house property head. If in question it has been said that there is a building, you run your office, and out of that office and services, you earn 20 lakh rupees. Even that 20 lakh does not have anything to do under the income from house property chapter. Clear? So now moving on with the provision, there are basically 3 conditions. There are basically 3 main conditions to taxable any income under the head income from house property. Condition 1, there must be a building. Of course, there must be a building or a land appertaining thereto. What is the meaning of that? We will discuss. So there must be technically a building. Fine. The assessee. Assessee means the person who received the rent, the person who is receiving the income, either should be the owner of that building or should be the deemed owner of that building. So the person receiving the rent, technically he or she must be either owner of the building or deemed owner, as explained under section 27 of income from house property. So what is the meaning of a deemed owner? We will discuss it, of course. And the building should not used by assessee for his own business or profession. If he's using that property for his own business or profession, then of course where the income will taxable, PGBP head. there is technically no direct income from that house. So if these three conditions has been fulfilled, and if there is any annual income arising from that house, that is going to be taxable from income from house property. So the charging section 22 says this, like we had a charging section of salary also, section 15, which told which income is going to be taxable under the head income under the head salary. The same way, now section 22 explain that if you have a building or a land appertinent thereto, and if the assessee is the owner or deemed owner of that property, what is the meaning of deemed owner? We will discuss in section 27. And that building should not be used for your own business or profession. Then that income is going to be taxable. If it is an annual income, that is going to be taxable under income from house property. I hope it's clear till now because it's a very simple thing. Now we will discuss all these things one by one with our notes. Okay, still good mornings are coming. Okay. Okay. So moving on to our section 20 to 27. Some students are asking about the salary question. So if you have any issue in salary question, you can send me the query. I will discuss those query day after tomorrow session. That will be my last session on 12th. Okay. On 12th of November, we will discuss the salary query if you have. So you kindly send me the salary query, what you need me to discuss over here. But we will not discuss it today. Today we will complete our house property provisions, and then on the last session, day after tomorrow, we will discuss about the salary as well as the house property questions. So chargeability section 22 explain the process of computing of income under the head income from house property starts with the determination of annual value. The word is called annual value. That means annual aggregate value, which is going to be actually earned or due every year. Annual value of the property. The concept of annual value and the method of determination is laid down in section 23. So how we will calculate the annual value, that we will discuss on section 23. The annual value of any property comprising of building or lands appertinent thereto, of which the assessee is the owner, is chargeable to tax under that income from house property. Of course, the same thing has been discussed. Annual value of the following properties are chargeable under the head profit and gain of business and profession. So if there is an annual value from a building, but that is due to you are running your business in that building, that is going to be taxable under the head PGBP. We just discussed it, okay? Portions of property occupied by the assessee for the purpose of any business or profession carried on by him. Properties of an assessee engaged in the business of letting out of properties. These are going to be taxable under the head PGBP. Now, a very interesting thing that under the income from house property, there will be a lot of questions in your mind. That what if I have 3 houses and all are let out? If I have 1 room let out and other part of my building is self-occupied? If my building is vacant for the whole year, etc., etc., etc. There are a lot of cases. A lot of question might be going to be arise in your mind, and it should be. But do not worry. We will discuss each situation one by one when the numerical topic will come. So first of all, what we are doing, we are reading the theoretical topic. So theoretical topic is also very important in your numerical chapters, your numerical paper. Generally what happened, in the numerical paper like income tax, accounts, etc., the student generally did not or do not give much importance to the numerical topic of those subjects. But this is not right. Do not underestimate the power of a common man. In the same way, do not underestimate the power of theoretical topic also. Because technically, theory or the provisions are the basis for the numerical. So if you did not complete your theoretical part correctly, then you might not be able to solve the numerical correctly. So every numerical chapter, every numerical subject, whatever the provisions, the theoretical provisions are there, you have to read them properly and completely. So never underestimate the power of theoretical provision. Because if we are going to discuss income from house property chapter, And like I just discussed with you, there's provision of deemed owner. So if you do not read the provisions of deemed owner, then how it is possible that if in a question, the deemed owner numerical concept has been given, you want to be able to solve that question because you do not know what is the meaning of deemed owner. So all theoretical as well as numerical provisions, all chapters are important. Understand? CA is a very, very comprehensive course. It covers a lot of things, a lot of subject, a lot of condition, a lot of chapters, etc. So please do not go for selected study. Selected study might going to help you in one paper or might be going to help you in two papers. But by the end of the day, you have to go with your comprehensive studies because it's an inter-level. You have two groups, foundation you have completed and now the final also. So it might be that you might able to complete or clear one paper with the help of selected study that just because of your luck. But finally, institute can ask anything from any chapter. So you never try to go with the selected study concept in CA courses. You have to complete all chapters. Okay. So property should consist of any building or land appertaining thereto. Building include not only residential building but also factory, office, etc. Land appertaining means land connected with the building like garden, garage, etc. It may be noted, that's an important note, it may be noted that income from letting out of vacant land, if there is no building is there, it's a simple plot. Vacant land is, however, taxable under the head income from other sources or profit and gains from business or profession as the case may be. So if there is a proper land and you let out it, then the rental income cannot be taxed under the head income from house property. Clear? Assessee must be the owner of the property. Owner is the person who is entitled to receive income from the property, of course. That's a very general concept. The requirement of registration of the sale deed is not warranted. Ownership includes both freehold, leasehold. Ownership includes deemed ownership. So this is important. What is the meaning of deemed ownership? Deemed means assumed. Technically, you are not an owner on papers, but still for the purpose of income tax, for the purpose of income from house property, you will be treated as deemed owner. So what will happen if you will be treated as deemed owner? If you are treated as deemed owner of any house property, then the income from that house property is going to be taxed in your hand. So technically, one is normal owner. Normal owner though is the one in which for those person house property is registered. If it is in your name, then you are technically a normal owner. But there are certain cases, there are certain exceptions when there is no registration in your name. Still, you will be treated as the owner of that property for the purpose of this chapter. So in these cases, you will be called a deemed owner. We're going to discuss it later, of course. The person who owns the building need not always be the owner of the land upon which it stands. The assessee must be the owner of the house property during the previous year. It is not material whether he is the owner in the assessment year, of course. If the title of the ownership of the property is under dispute in a court of law, the decision as to who will be the owner chargeable to income tax under section 22 will be of the income tax department till the court gives its decision to the suit filed in respect of such property. However, in case of recovery of unrealized rent and arrear of rent, ownership of that property is not relevant. So what is the concept of unrealized rent? We are going to discuss that also. So point number 8 till G, these are just the points which are going to be studied by you to make you understand what's the meaning of ownership. But for the purpose of this chapter, you should understand that even if you are the owner of the property or if you are a deemed owner of that property, in both cases, the income is going to be taxable under income from house property. If we summarize the above provision in simple words, then again, the above provision just explaining you this thing. The annual value of a property is taxable under the head house property if all following conditions are satisfied. There should be, of course, a building. Vacant plot is not as building. and its income does not include as income from house property. We just discussed about it, of course. Then the assessee should be the owner. It will be given in question that he is a owner or a deemed owner. Fine. If question is silent, you can assume that he is a owner or deemed owner as per section 27. So we will discuss what is the meaning of deemed owner under section 27. The property should not be used by the owner for the purpose of his business or profession. So whenever we use the word owner, that already includes the word deemed owner. So you should not use that property for your own business. For your own business. For example, I have a house property. Technically, okay, there is Mr. You can say Iron Man. So he has one property and he let out this property to Captain America. Now understand clearly. Mr. Iron Man has a house property and he let out this property to Captain America. Who is using this property for his business? So Captain America is using this property for his business. Okay. Actually, I'm a Marvel fan, of course. That's why I like these Captain America. I'm a very big fan of these fiction movies. Okay. So Mr. Iron Man gives his house property let out to Mr. Captain America, and he is using for this property for his profession or business and paying, of course, rent to Mr. Iron Man. For example, 10,000, 1 lakh rupees. Okay. So in this case, this 1 lakh is going to be taxable for under this head of Mr. Iron Man, income from house property, because he let out this property to someone. And if someone is using it for his business or residential, etc. purpose, it does not affect it. So if Mr. Iron Man is using this house for himself, for his lab or for as his house, in that case, lab or his business purpose, then in that case, it will not fall under income from house property. But technically what I'm trying to make you understand that if you have a property, if you are using it for your business or profession, that is not going to be taxable under income from house property. But if you let it out to someone else, and if he is using for his business or profession, so it does not matter because we are receiving the rent. It does not matter if we let out the property someone, if he is using it, not using his professional purpose, residential purpose, does not matter. In that case, all these three conditions to fulfill because there is a building. We are the owner, deemed owner, and we are not using it for own business or profession. We let out it to someone and somebody else is using it for his business or profession. So if all these three conditions are fulfilled, the income, the annual value of that property is going to be taxable under the head income from house property. Okay. Moving on further. Now, a very interesting situation. That is a house property in London. Okay. Income from house property situated outside India. So what will be the treatment? What will be the treatment of those house property? Those actually situated outside India. So the very interesting provision is this, that if you are having any house property which is outside India, the treatment will be same, exactly same as if that house property is in India. Assume that if that house property is in India, so what treatment we are going to do with that house property as per Indian provision? The same provision is going to be done with the properties which is situated outside India, but it will be applicable or it is going to be taxable depending upon the residential status of that assessee. So to taxable a residential or a commercial house property which is technically outside India, any house property which is outside India, if we need to taxable it under income from house property, that is only possible depending upon the residential status of that person. As we all know, in case of resident and ordinary resident, You have already studied the chapter residential status. So you must all know that if you are a resident and ordinary resident in India, then any income earned outside India or received outside India or deemed to earn outside India or deemed to received outside India, any income which pertains to your previous year is going to be taxable as well as in India also. So if the assessee is a resident and ordinary resident, then in that case, if your house is even outside India, that is going to be taxable under income from house property. So these are the cases when this is going to be taxable in India as well. In case of a resident in India, resident and ordinary resident in case of individuals in HUF, income from house property situated outside India is taxable whether such income is brought into India or not. Clear? The provision will be as same as that property is in India. There is no difference. We just need to do one thing. If the information is given in foreign currency, in dollar, etc., that rental income is $10,000, etc., we just need to convert it into Indian rupees. All of the provision will be as applicable in India. In case of non-resident or resident but not ordinary resident in India. So if you are a non-resident or a resident but not ordinary resident in India, income from property situated outside India is taxable only if it is received in India. So if you are a resident and ordinary resident, it's always going to be taxable. But if you are a NOR or NR, then house property income is going to be taxable only if the rental income is received in India. Okay. So let's discuss a question. Out of your study, let's discuss a question regarding this. So there is a question regarding this in our study material on page number 4.136. It's very simple, very, very easy. Here we come. Illustration number 2. What it says, of course, Rajesh, a British national, is a resident and ordinary resident in India. So he is a ROR. So if you are a ROR, technically everything is going to be taxable in India. Even if you are at Moon and earn some income from Moon, even that is going to be taxable in India as well. So during the previous year 22-23, he owns a house in London, okay, which he has let out for £10,000 per month. The municipal taxes to the Municipal Corporation of London is 8,000 during the previous year 22-23. The value of £1 in London, Indian rupees, to be taken at 95. Compute Rajesh net annual value of the property. So we need to calculate how much rental income he got. And out of that rental income, municipal taxes is going to be deducted. Why it's going to be deducted? Because to calculate income from house property, there is a format which we will discuss in our numerical topic, of course. But for time being, I can explain to you whatever rent you get. That is called gross annual value. It is not as simple as that. There's a specific provision for that, which we are going to discuss when we will take up the numerical topic. But for time being, I'm just explaining you the main format to calculate the GAV less municipal tax. And after that, we will arrive at annual value or net annual value. So in the question, we need to calculate the annual value. So how we will calculate the annual value? Simple. 10,000 into 12 and the exchange rate is 95. So that is going to be our GAV, gross annual value. Clear? And whatever municipal taxes you are paying in London, that is going to be deducted because the format say GAV minus municipal taxes paid in the previous year by the owner. That is going to be deducted. So balance will be called net annual value. I am just explaining you over here that the provision will be remain same, whether you have a property in India or outside India. This is the same provision which is applicable for any house property which is situated in India as well. So there is nothing to do. Just you need to convert that in a Indian currency, and that is simple. So solution says for the previous year 22-23, Rajesh, a British national, is a resident and ordinary resident. So he is a ROR. The income received by him of a rent of the house property located in London is to be included in the total income in India, and calculation will be done like this. So what is gross annual value? What is technically municipal tax? What is annual value, etc.? That everything is going to be discussed when we will take up our numerical topic. For time being, I was just trying to explain you that the provisions will be same whether you have a property in India as well as outside India. Okay. Going back to our notes, there are some clarification. One by one, we will take each clarification. Okay. So some important clarification, it says if property is held as stock in trade, then rental income will charge under the head income from house property. What it says, for example, if you are a builder, you are making apartments and technically in the business of selling of these apartments. So if you construct this building with a lot of flats, etc. So if you can understand the nature of a builder is to sell or purchase buildings. So technically buildings or flat is stock in trade. So any income which arises on stock in trade technically goes to PGBP head. So if he will sell it, that is going to be taxable under the head PGBP head. But if these properties are not technically able to sell, then he can let out these property, and if these property has been let out, then the rental income will taxable under the head income from house property. So if the building is stock in trade, then the income which will be generated out of the sale proceed is going to be taxable under the head PGBP generally, and the rental income, if these properties are let out for some time because it's not able to sell, then generally this is going to be taxable under the head income from house property in normal circumstances. Okay. So that was note number one. A builder, if let out his building for some period, then such income fall under income from house property because there is a building. Assessee is the owner and deemed owner, and he is not using that building for his business or profession. And that is an annual value. So in that case, that is going to be taxable under the head income from house property. Now, a very important topic is in case of composite rent. Composite means mix when owner charges rent, including charges for other amenities, facilities, benefits, etc. So what is the concept of composite rent? It will be like this. So if there is any composite rent, what happens when you're going to reside or going to take a flat in some society? So there is some society charges that will be recovered from you. So society charges, for example, will be for different amenities and benefit. Might be a watchman charges. Watchman has been provided for the society purpose and 200 rupees for that. Watchman charges. Like generator or inverter facility, 200 rupees for that. For lift maintenance, 300 rupees will be charged. For garden, etc., 200 rupees will be charged. For water supply, 1000 rupees per month. For your health club, etc., facilities might be 200. So this is 14, 15, 16, 17, 18, 19, almost 2100. If I'm not wrong, 2100 rupees per month has been charged for these amenities, benefit, facility, etc. Building rent, the flat rent is, for example, 20,000 rupees. So tenant need to pay technically 22,100 rupees to the landlord. Now this is called composite rent, which is technically comprising the flat as well as other amenities, benefit, etc. So it might be split up like this, or it can be given directly. Composite rent is 2100 for facilities Or in the question, this figure directly can be given also. So what is the concept under the income from house property said? That if it has been given separately, the building rent and the facilities rent, if it is given separately, it does not, we do not require that this has to be given like this. If it is given separately 2100 rupees society charges, that's enough. So if case of composite rent, if it is given in question separately, the building rent and the facilities rent, then it's very simple. This is going to be taxable only under the head income from house property. So these 20,000 rupees treatment will be under the head income from house property. But if it is not given separately, for example, it has been given in question that total rent for flat and facilities, total rent, composite rent, that means there is facilities also. So total rent for composite rent for that flat and facilities, 30,000 per month. In that case, where we should taxable it? Under the head income from house property or income from other source, etc. So there will be two situations in case of composite rent. One situation, the rent will be separately given for the building part and for facilities part. And the other is that will not be given separately. We do not know how much is for building and how much is for facilities. In both cases, what provision will be applicable? Let's see. So if such rent can be split up, that means the first part what we were discussing into two parts, one for house property, another for other amenities, charges, etc. Then the rental income for house property will be go for income from house property head, of course, and the other is going to be taxable as generally income from other source. The part of 2,100 rupees per month is going to be taxable under income from other source. Clear? If such rent is not separable, the other case that was 30,000 has been charged as a composite rent, and we do not know how much it was for building part and how much it was for facilities, then the whole rent will be taxable generally under income from other source. Nothing is going to be taxable under that income from house property. The whole value is going to be taxable as income from other source. Clear? So now moving on to the query session, let's see what query has been asked till now. Then we will come again and resume point number 3. Okay, so, okay. Miss Aditi is asking, if business is done on let out property by tenant, then income will be. Understand, if business is done on let out property by tenant, so technically, if I have a house and I let out it to the tenant and he is doing business, so it does not affect my income. He is going to pay me rental income, whether he is doing business or not. He will pay me rent. So that rental income is going to be taxable under my income from house property head. And if he is using that property for his business, then whatever business he is doing, whatever income he will earn, that will go in his business head provision, not under income from house property. So if I let out my property, I've just cleared it also, that if I let out my property to someone and he is doing business in that, it does not affect my taxability. My taxability will be still income from house property because I am going to receive rental income. Okay, Miss Aditi. Krishna is asking how point E practical possible owner of land, owner of building are same, how different. There can be situation where land does not owned by you, you are only the owner as a leasehold owner or as a freehold owner of that, the constructed part on. There can be situation. There might be agreement in which land ownership is not transferred, only the construction ownership has been transferred to you. So if that part has been transferred to you, in that case, this situation can arise. That's a rare cases, but it can be there. Okay. If Captain America is doing business, which is let out by Iron Man, the business is run by Captain Iron Man is partner of that business, then what happened? Sorry, what is the question? I'm not able to understand, Mr. Krishna. If Captain America is doing business, which is let out by Iron Man. Okay. So technically the first part, if Captain America, Iron Man has let out the property to the Captain America, The first thing you should understand, whatever rental income has been paid by technically Captain America is going to be taxable under that income from house property. But your next part is saying the business is run by Captain and Iron Man. You want to say that it's a partnership firm and Iron Man is also a partner in the business. Still, if that is a rental income is paid by that partnership firm to the Iron Man, that is going to be taxable under income from house property. Whether you are a partner or not, it does not matter. So the partnership firm has a separate identity. It has a separate PAN card also. So if that partnership firm is going to pay rent to Iron Man, still it's going to be taxable under that income from house property. Okay. Municipal tax paid by tenant will be taxable. Miss Bharati Donshi is asking, municipal taxes paid by tenant do not have any treatment under income from house property in the hands of landlord. Clear? So if it's a part of composite rent, that's a separate thing. But in building part rent only is going to be taxable in the hands of your landlord generally. Okay. You want me to zoom it? It's already 140. No, more zoom will. Okay. Sir, what if rent out my property to HUF made by myself? Will the tax still not be charged? Tax still not be charged? If you have made a HUF, it is a separate PAN number. It is going to pay you the rental income for the property which is owned by you. In that case, that rental income going to be taxable under your income from house property. Understand one thing, the law is very clear. Generally, the law is very clear about something. Like if you are going to fulfill those three conditions, generally, you have a house or a building. The assessee, the person who is receiving the rent, who is the assessee, who is receiving the income, is the owner or deemed owner of that property. And that is not used by himself for his own business or profession. Then that annual value received regarding that house property is going to be taxable under income from house property. So whatever question is arising at your mind, try to just put your question and see if these three conditions has been fulfilled, which is charging section 22. In that case, that income is going to be taxable under that income from house property. It's as simple as that. Do not complicate it. You just need to know the real provision. What is the actual provision? And just put your question in your provision. So provisions like a machine. And if you have a question, just put your question into that machine. And then analyze that. If that question fulfill the condition of provision, you will definitely going to get the correct answer. So to find the correct answer, there is 3 steps involved. First of all, you should understand the question. Listen or read that question. Fine. Then your brain comes, like apply the provision. You should apply your brain, your provision there. And then the answer, what you want to say. So if there's any question, you should not skip any of these three processes. First of all, here that means understand the question. Then use the brain, that means apply the provision. And then only answer the question. So technically what we generally do, we listen the question, we do not apply the provision. We just think, okay, it should be like this. And we answer. So we skip the second part, that is our brain. So that will be definitely the probability of wrong answers will be there. So always listen the question, read the question first. That's the first step. Then before coming at the conclusion, you have to understand that you should first of all put your question with the help of the provision and use your brain. What is the provisions? And now see, is your question fulfill the condition of the provisions? If yes, then you are able to solve the question yourself. That's a very simple thing. Always here, use your brain and then answer. Okay. These notes are, Mohammed Bed Bora is asking, sir, these notes are not uploaded on portal. I uploaded all the notes yesterday. They are on portal. Please check it again. If a person let out building and furniture, then it is taxable. So again, it's a kind of a composite rent case. It's a separate value available. We will taxable furniture separately, other sources, and we will taxable building under income from income from house property. If it is not separable, then we can going to taxable the whole value under income from other source also. Just Shah is asking which tax rate is higher, house property or other source. Okay. Now, let me ask a question to you. It's not a technically kind of question, but it's a very general knowledge question. We just discussed about the composite rent provision. And it says, if you can separate the composite rent, then house property part is going to be taxable under income from house property, and amenities and charges part is going to be taxable under income from other source. Okay. And the second point say that if such rent is not able to separate it, then the whole value is going to be taxable under income from other source. So if income tax department has made this provision, that whole income is going to be taxable under income from other source. So apply logic. Why they must have done this? Why? If they are saying that rent is not going to be separable, then we will taxable the whole value under income from other source. So why department must be doing it? Because if it is taxable, the whole value other source, that is going to be taxed high, or they might be doing because if the whole value is going to be taxable under income from other source, the tax rate might be less. So what will be the department intention to take the whole value to income from other source, to tax with a higher slab rate or higher rate of taxes, or the rate or the provision which will tax the higher value? Or department might be thinking about your benefit. If it is not separable, let's tax it income from other source, so your tax will be less. Suppose, assume, think and answer me. What is the department intention? If composite rent is going to be taxable under income from other source, so why this provision has been made? Why not income from house property? Because if it is going to be taxable under income from other source, then it's going to be taxed on higher side of tax. Because house property have a lot of benefits of deduction, etc. But in this case, there will be no deduction, etc. So you need to separate it always for your benefit. If you did not separate it, you need to pay high taxes. So that's why department has made the provision that if you will not separate it, we will tax it the whole value other sources. So you know if it is going to be taxed in other sources, this is going to be high tax. So what SSC will do always? They will separate the value. That house property value is this and society charges is this. So always it happens when you go into society. Always society charges are separate than the house property value. Okay. Okay. So collect higher tax, correct, Jasha, you are right. So now moving on to our third point. Income from house property can be charged when there is no real income. So there are circumstances where income from house property can be charged even without there is no real income. So point number 3, if I will discuss it with you right now, you might be feel confused because that is technically connected with our numerical topic. So point number 3, we will come back and discuss when we will discuss the numerical topic. So just have patience with point number 3. We will discuss it later. Why it happened, how it's taxable without even having income, that is going to be discussed after our numerical topic, of course. Point number 5 also, it is connected with numerical topic. So point number 3 and 5, technically it should be 4 point. Okay? Point number 3 and 4 we will discuss after completing our numerical topic. Now we are moving on to the definition of deemed owner. Under charging section, we discussed that assessee should be the owner or deemed owner of that property. So what is the concept of deemed owner? It is technically theoretical provision. It says the situations, the circumstances in which even the house property is not registered in your name. You are technically not the registered owner of that property, still you will be treated as the owner of that property. So there are certain situations, condition where you are not the registered owner, but still the income is going to be taxable under your head of income because you will be treated as deemed owner. So these are generally like clubbing provision. If you have discussed the clubbing provision has been discussed in your class, the deemed owner concept is just similar like to the clubbing provisions. And if it has not been yet covered in your session, then it will be covered later. So what is the deemed owner concept? let me discuss with you one by one. First is transfer to a spouse. So it says, for example, Mr. A earning income 10 lakh rupees per annum from his business sources. He is running a business and earning 10 lakh rupees per annum. So tax upon this income as per normal slab rate will be 1,12,500 rupees approximate. Okay, without cess, of course. Now Mr. A also having a house property and he wants to let out this property. And the rent is 2,50,000 per annum. So if Mr. A let out his property, which is in his name, Mr. A name, then the rental income again will be add in his total income, which was 10 lakh, and now it will be 12,50,000. So he needs to pay tax upon 12,50,000, and of course, till 10 lakh, the tax is 1,12,500 up to 10 lakh. And upon this 2,50,000, which he is going to earn extra, the slab rate will be now 30%. So he almost need to pay 75,000 rupees tax on this 2,56,000. Cess will again going to add. So on this 250, he needs to pay tax, that is rupees 75,000. To avoid this, what Mr. A do or did? There is Mrs. A also, his wife, and she is having nil income. She is a housewife. She does not do any. Does not earn any other income. So what Mr. A does? Mr. A transfer this property to Mrs. A. You can say gifted this property to Mrs. A. And registry has been made in Mrs. A name. So he transferred his property to Mrs. A. That means, and gifted like without consideration, and property has been now registered in Mrs. A name. So now because property registered in Mrs. A name, then is 2,50,000 now is going to be Mrs. A income, technically. And because up to 2,50,000, there is no tax. So there will be no tax liability. So this Mr. need to pay tax on only 10 lakh rupees, and this income within the house. This income is not just earned by Mr. A now, but it is in the name of Mrs. A only. So he technically save his 75,000 rupees tax, which he might need to pay if that income is in his name. So to avoid this provision, department say that yes, Mrs. A is the registered owner of that property. But to avoid this tax evasion provision, tax planning provision, tax avoidance provision, now, in this case, department has, of course, a tax loss of 75,000, and it can be multiple houses cases also. So the provision has been made that if you are transferring any property to your spouse, Mr. A transferring to Mrs. A or vice versa, then either take the adequate consideration. You should take the adequate consideration. That means the price of that property need to be paid by Mrs. A to Mr. A. For example, if the property value is 50 lakh, then if Mrs. A paid 50 lakh rupees to Mr. A, then this 2,50,000 will be assumed as Mrs. A income. But if there is no adequate consideration, then Mr. A will be treated as deemed owner of that property, and that rental income will be taxable under the head income from house property of Mr. A. So now you cannot do this kind of tax planning if you have a house property and if you transfer it without consideration, adequate consideration to your spouse. In that case, you will be treated as deemed owner and the income is going to be clubbed in your hand. That is 2,50,000 is going to be taxable in the hands of Mr. A. So adequate consideration means the market value technically of that property, and that income should be earned by Mrs. A herself. That is not going to be paid by Mr. A. The 50 lakh, if it is going to be paid by Mrs. A, then it should be earned by Mrs. A. If again That amount 50 lakh has been transferred by Mr. A to Mrs. A, and again then Mrs. A paid it to Mr. A. Then again this 250 is going to be taxable in the hands of Mr. A with clubbing provision. So either the adequate consideration there, or it might be a divorce. So if Mr. A take divorce from Mrs. A, then he can gift that property to Mrs. A, because now she is not Mrs. A. Now she is technically a stranger. So if you are transferring your property free of cost to a stranger, that is allowed. There will be no deemed owner concept applicable. But if you transfer a property to your spouse, then either you need to take the adequate consideration or you need to take a divorce. So if you are not taking the adequate consideration, not taking divorce, then in that case, you will be treated as the deemed owner of that property, and that rental income is going to be taxable in your hand. Okay. Moving on to our notes. Following persons are deemed to be the owner for the purpose of income from house property transferred to spouse in case of transfer of a property by an individual to his or her spouse. Otherwise, then for adequate consideration, the transferor is deemed to be the owner of the property. In case of transfer to spouse in connection with an agreement to live apart. Agreement to live apart means divorce, fine? Agreement to live apart means, in short language, we can say divorce. The transfer will not be deemed to be the owner. So if after divorce the property has been transferred, then the other person is not a spouse. So that person, she will be a stranger. So in that case, this provision will not be applicable. So in short, we can say either take the adequate consideration before transfer or take the divorce before transfer. Then the income will be of the transferee. Otherwise, the transferor will be treated as deemed owner. Okay. Same provision almost copy paste applicable to a minor child. Remove the divorce part, of course. Otherwise, it's the same concept. In case of transfer of house property by an individual to his or her minor child. If it is transferred to major child, then deemed owner concept will not be applicable. But if he or she transfer their property to his or her minor child, then in that case, the person transferring the property will be treated as deemed owner of that property. There is an exception also. Otherwise, in adequate consideration, the transferor would be deemed to be owner of the house property. Exception says, in case of transfer to a minor married daughter, the transferor is not deemed to be the owner. So provision says, if you transfer a property in the same case, so in case of a spouse, either you take adequate consideration or divorce. But in case of minor child, if you transfer your property to minor child, then either take the adequate consideration earned by him or her. In that case, deemed owner concept will not be applicable. If there is adequate consideration, there will be no deemed owner concept applicable. So if you have taken the adequate consideration, then there is no deemed owner concept applicable. Or if you are transferring it to minor married daughter. If you are transferring it to minor married daughter, again in that case, even if you are taking no consideration, without consideration, even in that case, that minor married daughter will be treated as the owner and you will not be treated as deemed owner. You not need to pay tax on this case also. So technically in case of a spouse, there are two exceptions, either take the adequate consideration or take the divorce. Again, in the minor child case, there are two exceptions, either take the adequate consideration or if it is you are transferring it to a minor married daughter, not a minor married son. If you are transferring it to a minor married daughter, in that case, that property will not be included in your head as deemed owner. Okay. So we can say as an example, if Mr. A has 3 houses, one he transferred to Mrs. A, without adequate consideration, without divorce. So what will happen? This house will be taxable under Mr. A as a deemed owner. Clear? Second house he transferred to his minor married son. Again, in this case, this is going to be as a deemed owner in the hands of Mr. A. Third, he transferred to his minor married daughter. This house is not be treated as deemed owner in the hands of Mr. A. So in case of this house, treatment will be in the hands of minor married daughter because she is minor. So taxability will be in the hands of the guardian, etc., with whom she stays. There might be a question in your mind how there is minor married daughter possible, because in our country minors marriage are illegal. But there are certain specific conditions where minor marriage can be allowed in our country also. There are certain specific cases. You can Google it when. So for the purpose of income tax, I cannot explain why and when it can happen. But if you have this question in mind, you can Google it, then in which situation a minor marriage can be approved in our country. So if in that case, there is a minor married daughter, and if the property has been transferred to that daughter, then it is not going to be taxable in the hands of the transferor as deemed owner. Note, it says, where cash is transferred to spouse or minor child and the transferee acquire property out of such cash, then the transferor shall not be treated as deemed owner of that property, but clubbing provision will applicable in that case. So if you are technically not transferring the house to your spouse, but you give some money to your spouse and now she buys house out of that money, in that case, deemed owner concept will not be applicable, but as per the clubbing provision, again, the rental income is going to be taxable in your head. Fine. So these are now third, fourth, and fifth point. These are theoretical point. You have to read it yourself. You can Google it about it if you have any confusion, or you can ask me in our next session, because for the examination point of view, these are not that important. So first and second point was very important. So we just discussed it about it. And in case of holder of an impartial estate, what is the meaning of impartial estate? Kindly go read it, and you can Google it, of course, yourself. Person in possession of a property. If you have a property with yourself, I can explain you in this. If you have property with yourself, you have a possession of a property, but it is not registered in your name till now. It will be registered later. So it says even that property is not registered. If there is a property which is occupied by you, which is in your possession, but that is not registered in your name yet. So even in that case, you will be treated as deemed owner if these three conditions has been fulfilled. Possession has been transferred to the buyer. Sale consideration has been paid or promised to be paid. Sale deed has not been executed in the favor of the buyer, although certain other document like power attorney, etc. has been transferred. So if there is a Mr. A, that point says that if there is a Mr. A who is a seller, he has a house, he wants to sell it for rupees 50 lakh. And if there is a Mr. B who is a buyer who want to purchase a similar house for approximate 50 lakh rupees. So Mr. B say, I will not pay more than 50 lakh for this house in any situation. And Mr. A say, I will not receive less than 50 lakh for this house in any situation. So if this deal going to happen, then we need to pay stamp duty, which will be almost 7 to 10% of the consideration. So in that case, 5 lakh almost need to bear by Mr. B more. And he was not able to pay more than 50 lakh. So he will not ready for this. Again, if it has been transferred like this, capital gain will be applicable on Mr. A. So, for example, we assume 3 lakh rupees capital gain tax he needs to pay. So again, he will refuse the deal because he need to receive 50 lakh. He is not ready to receive anything less than 50 lakh. And of course, he will also refuse the deal because he will not able to pay more than 50 lakh. So is to avoid this taxes provision, to avoid the stamp duty and the capital gain tax, they find a new provision. What they did, Mr. A provide possession to Mr. B. He give the possession of the house to Mr. B that you can come and live here. Again, Mr. B pay 50 lakh rupees to Mr. A. That just keep this 50 lakh rupees as a deposit with yourself. We will registry the property later. Let's make a power of attorney over here. Just a power of attorney. That's it. But registry will be done later. So earlier it was the rule that at the time of registry only, you need to pay the stamp duty and you need to pay the capital gain tax at the time of registry. So they technically delay the registry. They say we will do the registry after 50 years or 100 years or 200 years. So now just Mr. A needs, Mr. A provide the possession to B. So Mr. B wanted a house, he get it. He transferred 50 lakh rupees as an advance to Mr. A. So Mr. A needs 50 lakh rupees, he got it. It's just an advance on the papers. Technically, it's a kind of a consideration. And a power of attorney has been made that we are transferring the money and the house to each other, but registry will be done on a later date. So in that case, government will not get the stamp duty and capital gain now. Mr. B will get the house, Mr. A will get the 50 lakh rupees, but the stamp duty and capital gain will be deferred till the time of registry. And might be registry is not going to be done ever. So government will be in loss. So to stop this practice, department has made this provision that if there is a possession, there is a consideration, and there is a power of attorney or any kind of agreement, we will treat it like a sale. So you need to pay capital gain tax and stamp duty on this date when these three conditions has been fulfilled. And who will take the possession? Like in our question, Mr. B, who will take the possession will be treated as deemed owner. Why deemed owner? Because registry has not done yet. So registry is still in the name of Mr. A, but for the purpose of income tax, we will treat Mr. B as deemed owner of that property. And any rental income which arises on that property will be taxable in the hands of Mr. B. So that was the case we just discussed. It's very interesting tax planning there was. Fine. The same way there was point number 5, which say if you are a member of a cooperative society and that society provides you any building to use against the membership fees, and the membership fees is almost equal to the property value. So to avoid again the tax and the stamp duty, this scheme has been implemented. Department say now no. If you got a building against your membership fees, which is equivalent to almost the property value, we will treat it as a sale and you will be called the deemed owner, the person who have possession, and capital gain also need to be paid with the stamp duty also. So that is also a case of a deemed owner when you take actually a house or a building as a member of any company or a society. Next, person having right in a property for a period not less than 12 years. A person who acquire any right in or with respect to any building or part thereof by virtue of any transaction as referred to in section 269 UAF, that is transfer by of lease for not less than 12 years, shall be deemed to be the owner of that building or part thereof. So if you are technically having a property on lease for more than 12 years, then you will be treated as deemed owner again. So technically you are not the owner of that property, but for the purpose of house property, if you have taken any property on lease and the lease time period is more than 12 years, in that case, you will be treated as deemed owner again. Why we are discussing this deemed owner case? That if in examination it has been said that you have a property on lease for 15 years, then you will be a deemed owner. So that means if you sublet that property, to someone else, you have a property on lease, so you are technically not the owner, but you have the property for more than 12 years, then for income tax, you will be treated as deemed owner. So what will happen if you sublease that property? Then the rent paid by the other person is going to be taxable as your income from house property, because technically you are also now a deemed owner. Let me explain you how. This is a very interesting case. Suppose there is Mr. A who is the owner of this house, registered owner of this house. Okay. Now what happened? Mr. A gives up this property on lease to Mr. B. Mr. B is going to pay lease rent of 50,000 per month to Mr. A. So now there is a building as per charging section, 3 condition fulfilling. Mr. A is the owner, the assessee, and he is not using this building for his business. He just let it out. Okay. So this 50,000 is going to be taxable under income from house property in the hands of Mr. A. This is a simple thing. Now this lease provision will affect the Mr. B position, not Mr. A. So there are two situations. If this lease has been given to Mr. B for 15 years, and if this lease has been given to Mr. B for 5 years, it does not affect anyway the treatment in the hands of Mr. A. In case of Mr. A, 50,000 per month is going to be taxable under income from house property, irrespective of the fact that lease has been given for 15 or 5 years. The situation will change for Mr. B, not Mr. A. Now what happened? Mr. B sublet or sublease this house property to Mr. C. And C is paying rent. C will pay rent to whom? Mr. B or Mr. A? Of course, Mr. B. Mr. C does not know who is Mr. A. So he is paying rent to Mr. B 40,000 rupees per month, assume. Now this deemed owner concept comes into the action. If this is 15-year lease, then this means in this situation, Mr. B is deemed owner. And in this case, he is not a deemed owner. So how it will affect the position of Mr. B? It will be like this. So if in examination, examiner asks that what will be the head in which this 40,000 is going to be taxable for Mr. B. So in situation one in which Mr. B has leased for more than 12 years, so now he becomes the deemed owner. So this 40,000 is going to be taxable under income from house property in the hands of Mr. B. Because he also fulfilled these 3 conditions. There's a building. Now he is not the owner but the deemed owner also. And he is not using this for business purpose. He just let it out. So this 40,000 has been taxable in the hands of Mr. B, assuming Mr. B as a deemed owner. And this will be taxable as income from house property. But in this case, because he's not a deemed owner, so in this case, it's not going to be taxable under income from house property. That might be taxable as other source or PGP income, depend upon as the case may be. So this is important. So if somebody is deemed owner, that means the rental income will fall under your house property header. Okay. So theoretical provision almost end. Now the interesting provision, the favorite provisions of mine, that is practical provisions or numerical concepts start. So now we will see that in comparison to salary, how easy is income from house property. There are separate cases, different cases when property is let out, when property is self-occupied, when property is let out and self-occupied both, when property is let out but rent has not been paid by the tenant. When property is vacant for some time period and let out also. So there are multiple situations, there are multiple cases in income from house property. So let me tell you one thing, that if you find the correct case, that if the question has been given in the exam, and if you actually able to find that this is going to be this is going to be solved as per that particular case, then the numerical will be solved very easy. It will be very easy to solve a numerical if you are able to find that in which case this numerical or this question solved. Okay, one by one we will discuss all the cases. I have made 7 cases for you. In an examination, if any kind of question has been framed, that is going to be fall in either of these 7 cases. You just need to find out in which case it has going to be solved, and if you are able to find that out, that will be really easy for you to technically solve that question, and you will get full marks in house property. It's very easy to get full marks in house property numerical. Okay, so this is the calculation format. Calculation format, income under the head income from house property. We need to find out determination of gross annual value. First of all, we need to find the gross annual value. Then we will deduct out of that gross annual value, that is municipal taxes paid by the owner during the previous year. So there is 2 very important words. One is owner. Municipal taxes paid by owner only can be deducted. If it has been given in question that municipal taxes has been paid by tenant, you need not to deduct it from the gross annual value. Only those municipal taxes can be deducted which has been paid by the owner. And the word is paid by the owner during the previous year. If municipal taxes is due only, 10,000 due in previous year, out of which 6,000 paid by the owner, then only 6,000 can be deducted. If municipal taxes due is 10,000 in previous year, and out of these 10,000, 8,000 paid by owner, 2,000 paid by tenant. What we will do? Only 8,000 will be deducted. Very interesting situation. In the previous year, we paid municipal taxes 10,000 of the current year, and we paid advanced municipal taxes. Next year, municipal taxes also paid 10,000 in this year. So in previous year, we paid 20,000 municipal taxes. 10,000 belongs to this year and 10,000 belongs to the next year. It's paid by owner. So full 20,000 can be deducted in this previous year. So it is connected with the word paid by the owner during the previous year. Whether they are connected to previous year municipal taxes or preceding previous year or advance, the amount of municipal tax paid during the previous year by owner is going to be deducted. Okay. Then after that deduction, we will find our net annual value. So the first thing, the most important thing in the exam or to solve a numerical of house property, the most important thing is to find out the correct GAV. The first thing, that is determination of gross annual value. If you are able to find the correct gross annual value, then I think 70% work has been done. 70% question probability that you will get the full question correctly solved, 70% chances that you will get the full marks if you find the correct gross annual value. And let me tell you, if the GAV is wrong, then I personally feel there should not be any marks for you, because everything is connected with GAV. So if GAV is wrong, your annual value is wrong. If your annual value is wrong, the other things which is based upon the annual value, that is also going to be wrong. So if your GAV in a question is wrong, then I doubt you will get maybe a very few marks, or might be not able to get any marks in the question of income from house property. So this is the proper format. You might have remembered, I hope you might have remembered the salary format, how difficult it was. There was basic salary, advanced salary, arrear of salary, bonus, commission, allowances, multiple allowances, not even single allowances, there are multiple allowances. Then compensations, multiple compensation there can be, like gratuity, pension, leave encashment, VRS, profit in lieu of salary, provident fund provisions. Then perquisites, multiple perquisite. And after that, we will get the gross salary. Then deductions. And then we find the net salary. So the huge chapter was salary. Huge. Almost having 84 pages or 100 pages for theoretical provision. So comparatively to salary head, this is very, very, very easy. Ideal format for computing income under the head, income from house property, of course. First, we need to find the gross annual value. How we will find the gross annual value? I just told you that we will discuss 7 different situations. In each situation, I will explain how to find the gross annual value. So once you find the gross annual value, then the specific format is followed for all cases. There is no difference. The difference is only in gross annual value. So in different cases, the gross annual value will be changed from case number A to case number G. There are 7 cases. Only this figure will be technically changed. Generally, these all concepts are same for all cases. There is no difference in it. Okay. So after finding the gross annual value, we need to deduct municipal taxes paid by owner. It should not be due. It should be paid by the owner in the previous year. We just saw about it. Then we will come on to our annual value. So from gross annual value, we need to move on to annual value. And then after annual value, we need to deduct some deduction under section 24. There is one is standard deduction that is fixed, and that is 30% of annual value. So whatever annual value you arrived at above, deduct 30% of it as standard or statutory deduction. Clear? Now the second point is interest on capital borrowed. So the main calculation part is to calculate the interest. Otherwise, if you find the gross annual value, you just need to deduct the municipal taxes which will be given in question. After that, you just need to deduct 30% of annual value that is also fixed. So the main numerical topic is either to find the gross annual value or how to calculate interest on capital borrowed. Now, interest on capital borrowed is technically we are talking about the housing loan. If you have taken house loan, housing loan, home loan for the property, for the building, then the interest part will be allowed as deduction out of the annual value. To calculate interest upon anything, technically, to calculate interest, we need to know the sum value, the loan amount. Good news, the loan amount will be given in question. Clear? We should know the rate of interest. The good news, rate of interest will be given in question. We should know why interest is calculated. Why? Or when. So we know if there is a housing loan, then we need to calculate this interest. And the last thing, the time. So these 3 things will be given in question directly. What is the loan amount? What is the rate of interest? Whether we took housing loan or not, of course. The main thing is the time. We need to calculate 2 kinds of interest. One is current year interest and one is 1/5 of pre-construction period interest. This is a new word for you, I must think. Pre-construction period interest. So we need to calculate the current year interest and the 1/5 of pre-construction period interest. So I just need to explain you what time should be taken for current year interest. So if I'll tell you that timing is 10 months for current year interest, then it's very simple for you. You must have a loan amount. This is in question. Rate of interest is in question. Third point is not relevant because we will do this only when housing loan provision has been given. So if I tell you that calculate current year interest for 10 months, then you will apply this loan amount, rate of interest, and 10 months. One thing you should have also, that is calculator with you. So we can find the easily current year interest if we know what time current year interest we need to calculate, either for full year or half year or some months. And the other is 1/5 of pre-construction period interest. I called this in short PPI, pre-construction period interest. So the time need to be calculated, that what time for current year interest need to calculate and what time for pre-construction period interest. So if we find out the current year interest time and the 1/5 of pre-construction period interest time, then we will be able to solve this interest on capital borrowed concept. Fine. So before start solving this, let me take the queries. Then we will go for a break. We will have our tea, coffee, etc. And then we will resume. Then I'll explain how to calculate that pre-construction period interest time or a current year interest time. Okay, let me see the query. Okay, Mr. Suyog is asking if property bought on the name of Mr. A. So if if Mr. A paid the consideration for Mrs. A, again the income will be taxable in the hands of Mr. A as per clubbing provision. Fine. The provision I have explained, that the cash paid by, the same concept will be applicable. So Mr. A will not be a deemed owner in that case, but as per the clubbing provision, the income is going to be taxable in the hands of Mr. A. How it will happen? That will be discussed when the clubbing provision will come in your sessions. Okay. Okay. Pratima Gautam is saying, exception of minor married daughter will encourage people to arrange marriage of their minor daughter to just avoid the tax from house property. You know what you are asking, Pratima? Just to avoid tax of 75,000 rupees, like you can avoid a tax of 2,50,000 rental income. Fine. So that might a tax value of 75,000 rupees. So do you really think just to save 75,000 rupees of tax, somebody will marry his or her minor daughter to someone? Are you seriously thinking? There will be no costing in marriage. And this is not legal in our country. There are only exceptional circumstances when it can be done. So if somebody is doing otherwise than exceptional circumstances, that is an illegal thing. That minor married daughter will not be treated as married even. So the parents will be in jail also. So this is not the question. So how you can think that for the purpose of 75,000 tax, it's better to find a good CA. He will save your 75,000 tax and just charge us fee of some 1,000 rupees. So that will be an easy option to get married with someone of a minor married daughter. So that was a very funny query. Educate consideration से क्या effect होगा? Kavita is asking, educate consideration से क्या effect होगा? आप शायद ये पूछना चाहती हैं कविता कि educate consideration का मतलब क्या होता है? Educate consideration का मतलब है जो उस प्रॉपर्टी की रियल वैल्यू है उतना कंसिडरेशन. जैसे 50 लाख की वैल्यू है मिस्टर ए के पास प्रॉपर्टी की, उन्होंने कहा फ्री में दूंगा मिसेज ए को, तो डीम ओनर का कंसेप्ट लग जाएगा. तो मैं 10 रुपए में अपनी प्रॉपर्टी ट्रांसफर कर देता हूं मिसेज ए को, तो कंसिडरेशन आ जाएगा. तो डिपार्टमेंट कहता है नहीं, दैट शुड बी एडुकेट कंसिडरेशन, जो उसकी मार्केट वैल्यू है जनरली आपको उतना कंसिडरेशन देना पड़ेगा. एंड वो कंसिडरेशन मिस्टर ए के द्वारा दिया गया नहीं होना चाहिए, वो खुद का मिसेज ए का अर्न किया होना चाहिए. उसे कहते हैं एडुकेट कंसिडरेशन. ओके. अबे अच्छा, एक और बड़ा नया क्वेश्चन आया, बड़ा इंटरेस्टिंग है. तुम लोग बहुत ही इंटरेस्टिंग बच्चे होते जा रहे हो. वेरी नाइस. ओके. So, Mr. Anish Oja is asking, sir, what happens if Mr. A transfer the house to Mrs. A? After a few months, they got divorced. Again, the same thing. Somebody asked that minor child daughter marriage will be done. So I told that for just saving for 75,000, you thinking that someone will get his or her minor child married to someone, and the same, your kind of question is also the same. that just to avoid 75,000 of tax, somebody will take divorce. Divorce taking is not we are going to the market and actually purchasing some vegetables. It's not that simple. It's a whole process. It takes time. So just to save 75,000, ask your wife. You're not married, of course. So if somebody is married, ask him that is it possible to take divorce from his wife? And if you ask your wife, let's take divorce just to avoid 75,000 of tax. Are you serious? You think you will be able to see the next day of your life if you're asking this to wife? I can't do this. So please, this is really funny. But yes, technically we can say correct. Technically, you both are correct. If somebody is taking divorce and then transfer the property and then again married, so you can escape your tax liability. And if, as per the exceptional circumstances, if minor marriage is allowed, and if in that case somebody is transferring his house property to his or her minor married daughter, in that case, deemed or concept will not apply. Not for the practical purpose, I'm saying it's funny, but for technical purpose, yes, it can be done. What is stamp duty? Kavita is asking. Stamp duty is the government fees which government charge the time of selling and purchasing of buildings or immovable property. Right? That is called registration fees. You can understand like this. Mr. Arun is asking, sir, what is the tax processor? Tax processor? What is tax processor? If someone is on land, okay, and from that he again lend part position to other. Mr. Arun, seriously, I'm not able to understand what you are asking. So you can write me in Hindi if possible, or please ask the query correctly. I'm not able to understand what exactly you want to ask. Okay. Next is Alok is saying, if property is given on lease for 15 years, then both giver and receiver will be taxable. Am I wrong or correct? I think you might ask this query before I explain the concept. And after I guess explain the concept of deemed owner in case of lease for more than 15 years, more than 12 years, that query might have been solved, because I guess now it should be clear for you. Okay, next is Just Shah is asking, who is asking? Suman, Kalon Jia. Okay, Miss Suman. Do same lease property taxable twice with two different people, as A is owner and B is deemed owner? Is that okay? Yes, that is not double taxation. What is the meaning of double taxation, guys? Double taxation means that on the same income, the same person is paying tax twice. So in the example, Mr. A paying tax on 50,000 and Mr. B was paying tax on 40,000. So there is no concept of double taxation. In the same way, if I am working in some organization and they are paying me salary, so I am paying tax on my salary. Out of that salary, I am paying some amount of money to my maid or servant or my office staff. They are paying tax on their salary. They are going to market to purchase some vegetables. So whatever they pay to that, the seller, he is going to pay tax on that. So this is not the double taxation. It's a chain of taxation. Double taxation will be applicable only when the same person is paying tax on the same income more than once. Okay, I guess it's clear. Next is Josh is asking, sir, I had heard that we can also take advantage of building depreciation as tax deduction. How does that work? You can take depreciation only when this is used for your business. Okay. So if the building is used for your business or profession, that will not fall under income from house property. Charging section says clearly that should not be used for your own business or profession. So if you are using it for own business profession, so you are claiming depreciation in your P&L account. So if the property using for business, it cannot fall under income from house property, and vice versa also. So these are mutually exclusive cases. If any building or part of the building is used for the purpose of house property head, it cannot go to the business head, and vice versa also. I hope it's clear. Okay, so next is advanced municipal tax paid direct or not from GAV. Yes, advanced municipal tax paid will also deduct if it is paid in previous year. Okay. Next is also, sir, in that example you showed, who is asking Jasha, that difference did period of 5 or 15 years. If you got the lease for more than 12 years, then only Mr. B can be treated as a deemed owner. So I have taken example of 15 years lease, then he will be a deemed owner. But if it is a lease for 5 years, then he will not be a deemed owner. So they are two different cases of Mr. B. So if it is less than 12 years, the concept of deemed owner does not arise. So please explain where we can get the rate of salary for tax. It's a slab rate concept and you must have studied that in your basic chapters. In the session of basic concept, the faculty must have told you how to tax your normal income and a special rate of income. Okay. Next is all clear. Okay. Sir, what happens if transferred my own property with consideration to my wife? If you have transferred your own property with consideration, with adequate consideration to your wife, then she will be the owner of that property. So the rent income, whatever will arise on that property, will be taxable in her hand, not in your hand. Okay. Sir, what happened if transfer a property to my wife with consideration with my own money? Later on, she return it back, so money is also saved and tax is also deviated. If you'll, I just told you that if you will use your money to transfer the house, then as per the clubbing provision, that you need to pay tax on that income also. We just discussed it already. Fine. We have discussed Dhruvi. You have asked the same question. We just discussed it. Same question you have asked 10 times. Okay, Miss Kanoji is asking if fair rent and standard rent same. We will move on to the provision for calculating gross annual value. And when we will discuss the concept of gross annual value, then I will let you know what is the meaning of fair rent, standard rent, municipal rent, actual rent received, etc., etc., etc. Fine. So I have taken all the queries till now. So we are going for a short break of 10 minutes. And when we will resume, we will continue our the calculation of current year interest and pre-construction period interest. Once we will complete our current year interest and pre-construction period interest concept, we'll move on to our 7 different cases. And these are very, very interesting. So I also want to share a story with you. So how many of you are comfortable with Hindi? Because it's a very short story, and I guess the impact of story will be able to understand if it is in Hindi. So I'm going for a break, and when I'll resume, let me know if all of you are comfortable with Hindi story. Then I'll actually need to share a very interesting story with you in Hindi, and if it's not, then of course I will share that story in English only. Okay. So see you after 10 minutes. वेलकम बैक। आप सभी लोगों का वापस से स्वागत है इनकम टैक्स की क्लास में। हम डिस्कस कर रहे हैं इनकम फ्रॉम हाउस प्रॉपर्टी। ओके, सो लेट्स सी इफ समबडी आस्क समथिंग। ओके, कंफर्टेबल इन हिंदी, हिंदी 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 हिंदी। ओके, बोथ लैंग्वेज कंफर्टेबल, वेरी गुड। हिंदी एज वेल एज इंग्लिश, वेरी गुड। कंफर्टेबल हिंदी, वेरी नाइस, वेरी नाइस। तो जो हमारा नेक्स्ट टॉपिक है दैट वाज कैलकुलेशन ऑफ इंटरेस्ट करंट ईयर और प्री कंस्ट्रक्शन पीरियड इंटरेस्ट। उससे पहले एक छोटी सी स्टोरी सुनते हैं 2 मिनट की। इट्स वेरी इंपॉर्टेंट फॉर योर एग्जामिनेशन पर्पसेस, ऑफ कोर्स दैट्स एक्चुअली गोइंग टू मेक यू लर्न समथिंग। सो एक स्टोरी है जो हम सब लोगों ने सुनी है, खरगोश और कछुए की। फाइन, देयर वाज अ टॉर्टोइस, देयर वाज अ बनी, देयर वाज अ रैबिट। सो दे हैव डिसाइडेड फॉर अ रेस। एंड जब उन दोनों की रेस हुई, so of course, rabbit thought okay, he's very fast, so he will win the race. So he was like sit and he slept. And tortoise धीरे 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 चल के उस रेस को जीत गए. So what technically we learn from that race? Actually, this story I have from some social networking site. I have actually heard about it, and it's very good. So if you learn something from anywhere, then you should spread it for somewhere, someone benefit, of course. तो हुआ क्या, कछुआ जीत गया एंड रैबिट वाज ऑफ कोर्स लॉस्ट द मैच. नाउ रैबिट वाज ह्यूमिलेटेड बाय हिज फ्रेंड्स, रिलेटिव एटसेट्रा के यू लॉस्ट अगेंस्ट अ टॉर्टोइस, इट्स वेरी बैड. सो फ्रॉम दिस स्टोरी वी शुड अंडरस्टैंड दैट you should never underestimate your competitors and you should never be overconfident for yourself. So from a bunny point of view, you should understand, never be overconfident and never treat your opponent lesser than you. And from the tortoise point of view, you should understand, always focus and study and work hard. So if you are focused, if you work hard, you might be able to win every race. So what happened? First part is this, that rabbit lost. Then rabbit asked again to the tortoise that let's have a race again. So उन्होंने decide किया कि हम एक बारी वापस से रेस करते हैं. Now this time rabbit knows कि अभी मुझे सोना नहीं है, तो फटाफट वो दौड़ा और उसने रेस खत्म कर ली है, won. So from this second part, you should understand that always learn from your mistakes. If you have done something wrong, if you have done some mistake, do not repeat it. So you will succeed even if you have failed somewhere. But if you learn from that, that will also going to help you in future. Like if you lose, you should learn. If you won, you should celebrate. So even learning has some good features. Even failing has some good features, because a failure taught you a lot of things which is technically winning might not able to make you learn. So from the second part, now tortoise lost the match and rabbit win. So the moral of the story of second part was always learn from your mistakes. Now the third thing, now जो कछुआ था उसका ईगो हट हो गया, उसने कहा इट्स वेरी बैड, let's again have a match, again a race. And tortoise said, this time I will decide the route. The race is going to be conducted, that will be decided by me. Now rabbit says, okay, I will not sleep, so I can win every race with him, no problem. So उसने कहा ठीक है, रेस करते हैं. And now जो नया रूट डिसाइड करा टॉर्टोइस ने, कछुए ने, उसमें एक छोटी सी नदी थी, रिवर, और ये बात रैबिट को नहीं पता थी. रेस स्टार्टेड, रैबिट तेज तेज आगे भागा, लेकिन नदी आ गई और वो रुक गया. कछुआ धीरे 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 भागा एंड ही जस्ट स्विम फ्रॉम दैट रिवर एंड वन द रेस. तो पार्ट 3 से हमें समझ आता है कि वी शुड नो आवर वीकनेस एंड स्ट्रेंथ. वी शुड नो व्हाट इज माय वीकनेस एंड माय स्ट्रेंथ. तो जो आपकी वीकनेस है, आपको पता है आप स्लो हो, आप उसे नहीं हरा सकते. देन यू नो व्हाट इज योर स्ट्रेंथ एंड हिज वीकनेस ऑल्सो. So आपको पता होना चाहिए कि आप, if you are not that good in numerical, then you should, आपको अपना theoretical part बहुत strongly तैयार करना चाहिए. अगर आपको लगता है कि आपका टाइम मैनेजमेंट खराब है, that is your weakness in examination, then you should go for mock test. Institute has provided you mock test paper. You should set a time and go for your mock test. If you think आपकी speed हल्की है, then you should go for mock test. So आपको अपनी weakness, अपनी strength पता होनी चाहिए. That really help you. Now the most interesting part is part number 4. So first part, tortoise win. Part 2, rabbit win. Part 3, again tortoise win. Now हो क्या रहा था, ये सारी जो चल रही थी story, उसमें there was a line. A line was seeing ये सब चल रहा है. There was a tiger, there was a lion, and he was seeing कि मुझे इन दोनों को खाना है. And he just jumped over here and say, I want to eat you both. Then rabbit और tortoise ने कहा कि आप तो मैं कभी भी खा सकते हो, but let's have a match first. एक रेस करते हैं हम तीनों, और अगर आप हार गए तो you will leave this jungle forever. और अगर हम हारे तो you can eat us easily. The lion think that's a good deal. Lion know, जो इनका रूट है उसमें एक छोटी सी रिवर है. Lion knows कि I'll swim it. And speed भी Lion of course know कि tortoise जीत नहीं सकता, but Lion has a doubt. Lion ने कंडीशन रखी फाइन कि अगर मैंने तुम दोनों में से किसी भी एक को हरा दिया तो भी I will win. मतलब अगर जीतना है तो तुम दोनों को मुझसे पहले रेस फिनिश करनी पड़ेगी. सो रूट डिसाइड करेंगे आप, लेकिन लाइन ने कहा कि ये रूल है कि आप दोनों को ही जीतना पड़ेगा मुझसे, तभी, अदरवाइज आई विल ईट बोथ ऑफ यू. एंड कछुआ और रैबिट ने कहा ओके डन. अब नाउ रेस स्टार्टेड, एंड नाउ व्हाट हैपेंड व्हेन द रेस स्टार्टेड, जो कछुआ था वो रैबिट की पीठ पर बैठ गया. फाइन. और रैबिट वाज फास्ट, सो फटाफट से रिवर के पास पहुंचे, बट लाइन को पता था कि रिवर रैबिट कैसे क्रॉस करेगा. तो जब रिवर आई तो रैबिट कछुए के ऊपर बैठ गया और दोनों ने फटाफट से रेस कंप्लीट कर ली. नाउ डू नॉट आस्क दिस काइंड ऑफ क्वेश्चन कि सर रैबिट कैसे बैठा होगा कछुए के ऊपर, कछुआ छोटा होता है. इट जस्ट ट्राइंग टू मेक यू अंडरस्टैंड थिंग, बिकॉज द मोरल ऑफ दिस फोर्थ स्टोरी इज वेरी इंपॉर्टेंट. Even if you have good friends, if you have good friends, then you can beat your stronger enemy in your life. And you should know that good friends की अपनी अपनी strength और weakness है. Why I'm telling you this? Because if you have good friends around you, you can have group studies. If somebody is good in numerical and you are good in theory, you can exchange your thing. You can set paper for each other. You can check your copies. This is a very, very good thing. So you can easily get yourself prepared for examination. So good friends जो सही हैं, उनकी strength weakness आपको पता हो, और अगर सही friend आपके साथ है तो आप even weak भी हैं तो भी you can defeat anyone stronger than you. So that's very very important. And जो friends है ना जो बिल्कुल कोई CA course नहीं कर रहे, they have nothing to do with studies, please get away from them for some time, because you should have those kind of friends which are like you for this profession. Because a free person in this world is the most dangerous person in this world. If somebody is free, has nothing to do anything, he's the most dangerous weapon in this world. You should stay away from him, because if somebody is free, nothing is more dangerous in this world with a person is free with a brain. So he might be a more destructive weapon in this world. So this is a time you should stay away from these kind of weapons. So that was the story. I hope शायद इससे कुछ अच्छा आपको लगा हो. Next, back to our provisions. Fine. So that was computation of pre-construction period interest and current year interest. So I'll explain you how to calculate current year interest and pre-construction period interest. As we explained before the break, that in question there was loan amount that will be given, interest rate that will be given. Of course, there will be a housing loan. That's why we are doing this. And the most important thing to calculate this whole current year interest and pre-construction period interest, the time duration for which we need to calculate these interest. How we find the time calculation for both of them separately? Let me explain to you. Current year interest is very, very simple. There's nothing which I need to explain to you, because that is a very general thing. Current year interest means the interest on outstanding loan amount in previous year. That is, previous year is 22-23. So whatever loan amount, housing loan amount has been outstanding during this time duration, we need to calculate interest upon it. Loan amount will be given, rate of interest will be given. From my point of view, there can be technically three situations. Either loan amount, for example, loan amount is 10 lakh rupees and rate of interest is 10% per annum. So in question, there might be a cases when loan amount is outstanding for full previous year. The same loan amount is outstanding during the full previous year. That means in current year, there was loan of 10 lakh rupees, 10% per annum, and it is due or outstanding for the whole year. So in this scenario, the current year interest will be 10% of 10 lakh rupees. That will be 1 lakh rupees. It's as simple as that. I am not going to teach you anything new because calculation of interest is a general thing. It's a mathematical thing. There's nothing new I am teaching you. But I'm just telling you situation. First situation might be the loan amount is outstanding full year. In that case, interest for full year will be calculated. Of course, there is nothing new. Second, loan amount has been repaid during previous year. So for example, if in the question has been given that loan repaid on 1st November 2022. So how many month current year interest I need to calculate? Please answer me. I am waiting for your answer. If it is given in question or tell me the actual amount of interest of current year. If the question has been given that 10 lakh rupees, 10% per annum rate of interest, but the question has said that the whole amount of loan has been repaid on 1st November 2022, then how much interest will be for current year interest? Can you calculate it for me? I'm waiting for your answers. Where is my calculator? I'm searching it for. Just a second. There was multiple calculator over here. You please calculate. I'm bringing my calculator, so I'll solve it for you also. So you need to answer me that if there's a 10 lakh rupees at the rate of 10% per annum, and if loan has been repaid on 1st November 2022, then for how many months we need to calculate current year interest? So that's a very simple question. Let me see. Okay, Mr. Kojema is saying 6 months. Dhyanesh is saying 7 months. Students, this is not difficult. This is very, very simple. So I need correct answer from everyone. Fine. Somebody is saying 50,000. Somebody is saying 10 months. Somebody is saying 833. Oh my God, so different answers. Should not be like this. The answer must be same for you because it's a very simple question. Fine. So we are talking about the previous year. Do not calculate the calendar year first of all. So for previous year from, that means April, May, June, July, August, September, October. We need to calculate 7-month interest. That will be my current year interest for this calculation. And how much will be 7 months? 10 lakh into 10%. Calculator is not working. That means 1 lakh for 7 months. Both are not working. Just 1 more minute, students. I'll be back. The correct answer will be 583333. Okay. Do I need to explain it? I should not, but fine. Okay, that is 10 lakh, 10% into 7 upon 12. That will be 583333. So those have give the correct answer. High five from my side, from Wi-Fi. Okay. So that will be a case. Case 1 will be like the loan amount is standing for the full year. Case 2, loan amount has been repaid full during the previous year. it might be given that some amount of loan has been repaid during the previous year, like out of 10 lakh, 6 lakh has been paid on 1st November 22. So in that case, what we should do? Upon 10 lakh, we will find the interest for 7 months. And because 6 lakh has been paid, so for on 4 lakh rupees, we will calculate interest of 5 months. So it's a numerical provision, mathematical provision, nothing to do with the concept. I know you all are able to solve it. Okay. So that can be a case that loan amount has been repaid in full or in part. So if it has been paid in part, you have to calculate on part interest for current year interest. Third case, full loan amount as paid before previous year 22-23. So if this 10 lakh has been paid before previous year 22-23, that means in the preceding year, the whole amount has been paid off. In previous year, for example, 21-22 or earlier. So if that case is given in question, that's the most beautiful case, because in this case, interest of current year will be nil. So there will be three circumstances. Either the loan amount is full loan amount outstanding for the full year, then the full interest will be calculated as current year interest. Second case, that loan amount has been repaid full or partly during the previous year. Then we need to calculate as the case may be. And the third is loan amount has been paid before this previous year. If the loan amount has been paid before this previous year, then in that case, we need not to calculate current year interest. There will be no fourth situation. There can be these three situations, 1, 2, or 3. So for current year interest, either it will be full year interest, there will be no interest, or there will be part interest. Now the main concept is pre-construction period interest. Now understand this very carefully. First of all, I will explain you the concept of the meaning of pre-construction period. Then I'll tell you how to calculate it. That is pre. As the name suggests, it's a pre-construction period. That means before construction. It's a pre-construction period. Pre-construction period, in short, I say PP, pre-construction period, and if interest include, that is called PPI. Now, what is pre-construction period? Please understand. For example, if Mr. Iron Man, chalo, Hulk kar dete. Mr. Hulk took a loan of 10 lakh rupees at the rate 10% per annum. Took a housing loan of 10 lakh rupees at the rate 10% per annum. On 1st July 2019 for construction of a house. Clear? So if he took a loan from a bank on 10 lakh rupees at the rate of 10% per annum on 1st July 2019. Now the house start, construction is work in progress. Construction started from 1st July 19. So this year construction has not been completed. House property provision will be applicable from the year in which house is completely constructed. We cannot apply income from house property provision before the house is completed. Under construction property will not fall under the category of income from house property. So until otherwise the house property has been completed and a completion certificate has been generated, from that year only income from house property provision will applicable. So from 1st July 2019, he took a loan, but house property is now under construction. That is work in progress. So technically this year income from house property provision will not be applicable. But you need to pay the interest to the bank. Bank will charge the interest from you. It does not matter. You need to pay the interest to the bank. It does not matter whether house property treatment has been started in under income tax or not. So bank will charge the interest. So interest for 9 months we need to calculate. that is almost 75,000. So technically, he need to pay 75,000 to bank. But this interest benefit cannot be claimed under income from house property format. You know the format? In the format, we find gross annual value, then annual value, then less 30% reduction, less interest on capital borrowed. Neither we can charge current year interest, neither we can charge 1/5 of pre-construction period interest, even when we are paying interest to bank. But this interest has no treatment under income from house property until the house has been constructed. Clear? So it happened in 2090-31st March 20 year. From July till 31st March 20. Clear? Now in the next previous year, that is 20-21, house is still work in progress. Now again, the interest paid to bank will be for full year, and that is 1 lakh rupees. So we need to pay the interest to the bank, 1 lakh, but can we claim that interest under income from house property in this year? Of course not, because the house is still work in progress. Then the previous year, 21-22, again the house is work in progress, an interest of 1 lakh rupees charged by bank. House property treatment of this interest will be 0. Now suppose in current previous year, now 22-23, the house is completed. And it's completed on, for example, on 1st December 2022. Now from this year, income from house property provision will apply. Now from this year, we will calculate the GAV of this property, less, as per the format, municipal taxes paid by owner in the previous year need to be deducted. Then we will be on annual value, then deduction 30% of annual value, whatever it will be, that need to be deducted. Then we will come on to interest provision. Now we need to find out current year interest and 1/5 of pre-construction period interest. Now very interesting thing is coming in this interest provision. What is the interesting thing? Now listen carefully. In the year in which house is completed, the whole year interest, if loan has not been paid, the whole year interest, house is completed on 1st December 2022. But the whole year interest, that means from 1st April 22-31st March 33. It is a provision that in the year in which house will be completed, the full year interest will be treated as current year interest. The full year interest. You cannot calculate that house is completed on 1st December, so I'll take December, January, February, March. No. In the year house will complete, the full year interest will be treated as current year interest. So in my example, the housing loan is 10 lakh. Nothing has been paid. Rate of interest is 10%. So the full year interest will be rupees. 1 lakh will fall under current year interest. Why it's happening, you will understand when we will solve pre-construction period interest provision. Now, what is the pre-construction period interest? I'm removing these lines. Now, how to calculate pre-construction period interest? Now, the provision says to calculate every time period, to calculate any time period technically, if you need to calculate any time period, we need to know 2 points, when it should start and when it should end. Clear? It's a basic thing. If I'll start you after 5 years, that in how much time you have completed your CA? Suppose you have become a CA after 2 years, and after 4 or 5 years, somebody asks you how much time you took to complete your CA. Then how you will measure that time? The date you registered for foundation, that will be the date you started for CA, and the day you will get the membership number is the day when you technically end the journey. So for every time duration, there must be a starting point and there must be an end point. So starting point to calculate pre-construction period interest. The starting point is, of course, loan taken. The day you loan taken date, that will be called your starting date. In our example, loan was taken on 1st July 2019. Technically, if you will go with this, that what is the pre-construction period interest? The name suggests the time period which belongs to before construction, pre-construction. So before completion of that time duration will be called pre-construction period. Why we need to calculate it? Because we have paid interest 75,000 in first year. We have paid in previous year 20-21. This is for 1920. And again, we have paid 1 lakh rupees. That is 21-22 interest to bank. But we did not claim deduction of this. The fourth year in which house completed. This full 1 lakh fall under current year interest heading. So this interest has been claimed under income from house property. But these three interests not have been claimed yet because they belongs to pre-construction period. Again, do not ask that, sir, house complete on 1st December 2022. So why we are not doing till over here, and this 11 months also include there, because the provision has said in the year of completion, full year interest will be taken as current year interest. So we cannot take interest till 30th November 2022. This full year interest will fall under the definition of current year interest. Before that, interest will fall as pre-construction period interest. So with the help of this formula, always apply this formula to find out pre-construction period. That will be really easy for you. In examination, it will not be given like this, that you have taken loan, that year interest is 75,000. You need to calculate this whole interest by one go with the help of this value. You need to find the pre-construction period. Just take the date, loan taken. And of course, end date was loan repay date. That is not mandatory that given in question. Loan repay date or 31st March. Due to this provision, due to the second provision, in the year in which house is completed, the whole amount will fall under the current year interest. Why it has happened? Because of this provision. Because second point says 31st March before completion of house property, whichever date is earlier will be the end date. So starting date will be one only, but for end date, you need to find these two dates, and the earlier will be called the end date for it. So in most of the question might be loan repay date will not be given, but this date will always be there. So in our question, house is completed on 1st December 2022. So you need to find out what is the 31st March before this date. When the 31st March before this date has been come, that will be on 31st March 22. So what is my pre-construction period is? My pre-construction period is 1st July 2019 till 31st March 2022. That means almost 2 years and 9 months. You have to calculate 2 year 9 months interest, which you can calculate directly also. I have already calculated separately. That is 2,75,000. You can directly calculate it with the help of 10 lakh rupees loan for 10% per annum. You can find out now 2 years and 9 months interest. That will be 2,75,000. So that is pre-construction period interest. That is the interest which have been paid before completion of house. And because it has been written that should be 31st March before completion. So always the interest which accrue in the year of completion of house will fall under only current year interest due to this 31st March provision, because we will take till 31st March 22 interest over here. So full current year interest will fall under current year interest heading. We are not going to deduct the full value. The department says you need to write off this interest out of 5 years. So for every year, you need to claim 1/5 out of this as a 1/5 of pre-construction period interest. So always follow my guidelines. If you need to calculate in any example pre-construction period, just write it down. Loan taken date, loan repay date, or 31st March before completion. Then put the value in these. You will find your correct pre-construction period. The answer will never be wrong if you will put the value after writing this formula. It will always come the correct pre-construction period. Multiply it with the loan amount and rate of interest. You will get your pre-construction period interest. And the full interest will not be allowed. Only 1/5 will be write off every year. But this 1/5 again has a special impact on the provision. Let's see how. Back to the provision. This is the provision I have already written, actually write for you in the notes. So you can understand, find out pre-construction period as follows: from the date of borrowing and ending on the earlier of following, that is 31st March, immediately prior to the date of completion of construction or date of repayment of loan. Whichever is earlier, that will be your end date. The deduction of pre-construction period interest will be allowed from the completion year of the house. It's obvious. The house property provision automatically will start from the year in which house is completed. So, obvious, the pre-construction period interest, the current year interest provision, all will be started from the year in which house property has been completed. Interest on a fresh loan taken to repay the original is allowed as deduction. Fourth point is very interesting. And I am going to ask this question from you. No deduction of pre-construction period interest if house is completed on or before 31st March 18. In the question, pre-construction period interest will not need to calculate if in the question it has been given that house is completed on or before 31st March 18. Technically, we will calculate current year interest in this case if loan is outstanding in our previous year 22-23. But if it is given in question that house has been completed on or before 31st March 18, then that's a very good news for you, because in that scenario, you need not to calculate pre-construction period interest. So it's an advice to you. Kindly learn this date thoroughly. And always in question, check if the question says the house is completed before 31st March 18 or up to 31st March 18. In that question, do not calculate pre-construction period interest. Fine. Why this date is 31st March 18? Why? Can anybody answer me? In short, I'm waiting for your answer. Can anybody tell me why that is 31st March 18? Ram Bahadur Mahatma, sir, you are such a great guru. You don't teach only subject, but gives us insight of life so that we can learn great lessons even from failure. Thank you, Mr. Ram Bahadur. I'm privileged. I'm really honored. If you think like this, really, really thank you so much. Okay. Dhyanesh is saying COVID. No, where was COVID in 2018? Why? COVID was from 2020. No concept of 18. Let me tell you, in the next previous year, right now we are discussing previous year 22-23, but for previous year 23-24, this date will be 31st March 19. So every year this date changed. For previous year 21-22, there was 31st March 17. If I am going to teach students for previous year 23-24, then over here it would be written 31st March 19. Why it is like this? It's a very simple question. Okay, Mohammad Baid Vora is saying correct. Yes, very good. Okay, Renu Kumari is saying only for 5. Very good, well done. Alok Sivalani is saying because of amendment. No, there is no as such amendment. I never asked question which I did not teach you. I have already told you why it should be the concept. You just need to click it. 5 is reduction would be over. Very well done. Subhashish Partho, high five from Wi-Fi. Very good. 5 years preceding previous year 2023. Yes, Murtada Ali, very nice. So let me tell you, it's a very simple thing. Why it is? Because pre-construction period interest is for 5 years. It's 1/5 of every year. So if your house is completed up to 31st March 18, so that means from this year, income from house property provision might have started applicability. So if pre-construction period interest, suppose 1 lakh rupees, and interest start allowed from the year house is completed. So 1/5 will be allowed in this year. That means 20,000 will be claimed, must have been claimed in 31st March 18 provision. Then 31st March 19 provision, 20,000 more have been claimed. Then 31st March 20,000 have been claimed. Then 31st March 21, 20,000 have been claimed out of this 1 lakh. And 31st March 22, 20,000 have been claimed. So this 1 lakh deduction of PPI has been exhausted, completely exhausted. That means in 5 years. And our previous year is 22-23. So before my previous year start, the full deduction has already been claimed. So you cannot claim this deduction now in previous year 22-23. If house is completed in 2019, then 4 year has been claimed and I can claim 20,000 in previous year 22-23. So it's a very important date. Remember it. If an examination it has been given that house is completed in 31st March 18 or before, then please do not calculate pre-construction period interest and do not allow it as a deduction. Your whole hard work will be useless. So this date is very important. Learn it properly. Okay. If construction completed on 31st March itself, like for example, in question it is given that house has completed on 31st March 2021. Then for the purpose of pre-construction period, should we take the preceding date 31st March 21 only? Or we should go 1 year back 31st March 20? The answer is we need to go 1 year back. If construction completed on 31st March, then preceding 31st March will be taken only. That is, construction completed on 31st March 23. If it is given in question, then for the purpose of pre-construction period calculation, then the date will be 31st March 12. Not sorry, 12 is wrong. Sorry. It is 22. So for the purpose of pre-construction period, the second point which says that 31st March before completion of the house. So if in question it has been given that house is completed on 31st March 13, then you should take 31st March 22 as a date on which construction has been completed before that 31st March. Okay. Here is a question example for your homework. Of course, I have prepared a question. If loan taken on 1st April 2019 for 10 lakh rupees, 10%, and house property complete on 11th February 2023. Calculate PPI and current year interest. If you have to calculate both current year interest and PPI for all cases. Assuming case A, no loan repay yet. So in this case, you need to calculate the current year interest as well as 1/5 of PPI. Whole amount repaid on 1st August 2021. If the loan amount has been paid on August 21, in this case, you need to calculate current year interest and PPI both. And third, suppose house property completed on 31st March 23 and no loan repaid yet. In this case, also you need to calculate current year interest and 1/5 of PPI. When our next session will come, that is day after tomorrow, I will ask the answer and please send me the answer like this. Option A, current year interest amount and PPI, 1/5 of PPI. Listen it carefully. Don't give me full PPI, give me just 1/5 of PPI. Same for case number B, the amount, same for case number C amount. So for each cases, there must be two answers for you. You have to write me the correct current year. In your query session, you send me the answer, current year, and the 1/5 of PPI. Okay. And I'll solve it for you. If somebody has some issue, I'll solve it in the next session. Now we are moving on to our cases. I just told you that there are 7 different cases. And in 7 cases, we need to calculate income from house property. So if the question is given in your examination or in mock test paper or in study material, that will fall in one of these cases. What kind of cases these are? Which case include or consist which scenario? This is one by one we are going to discuss. So different cases to solve income from house property, numericals. Case A and case B have same kind of solution mechanism. That's why I included both of them in a single case. So case A and B applicable when the house is self-occupied. Self-occupied means if you are using it for residential purpose for yourself or your family is using it. And unoccupied, or if there is a house which is unoccupied, which is vacant. For example, you have a house in Delhi, but you have got an employment in Mumbai. So you transfer with your family to Mumbai, but the house which is located in Delhi, you did not let it out. So it was vacant. It was called unoccupied. So if you are occupied any house property for yourself and your family, or it is unoccupied, then the provision and treatments are same. This is the question. You can see that case A and B, two self-occupied or unoccupied house property value will be nil. That's a very good welcome step. Earlier, it was only one house property which has been annual value is nil. So government say we are providing you at least two houses value. If you have only two houses, maximum two houses, and if they are self-occupied or unoccupied, vacant, then we will not charge anything from you. Technically, there is no real income because if you have two houses and you are using it for your residential purpose, or if it is vacant and you are residing some other place and paying rent over there, then for two houses, there will be nothing going to be taxable in the hands of an assessee. You can see the help of the picture. Case A and case B, two self-occupied, unoccupied, house property will be nil. House 1, annual value nil. House 2, annual value nil. The solution format will be like this. Annual value of maximum two houses can be nil if as self-occupied or unoccupied. The best thing, the annual value directly will be considered as nil. Let me explain you with the help of an example. Then we will read it with the help of notes. Provisions say, for example, there is Batman. So provisions say if Batman has one house property, only one house property, which he used for his self-occupied. Self-occupied means for his residential purpose. Himself and his family. The income tax say we will consider this house value as nil. Annual value is nil. The format is gross annual value less municipal taxes. Then we come on annual value. But in this case, in self-occupied, case number A, you need not to calculate gross annual value. You need not to deduct the municipal tax. Directly, annual value will be treated as nil. Less 30% deduction, of course, this is also going to be nil because it is of annual value. And if annual value is nil, then 30 or any percentage will be, of course, nil. Less interest can be deducted. You will find the current year interest as I have explained it to you. How to calculate? You need to calculate the current year interest if there is housing loan is given. And that's a welcome step again. Because due to this interest, there will always be loss. Current year interest and 1/5 of PPI. You need to calculate both of them as per provision has been explained to you. And you can deduct the interest value out of the nil value. So always it will be always loss. There cannot be profit in case number A and B ever because if annual value is nil and if there is loan exists, then it will always be loss. And this loss will help you to reduce your tax liability. For example, the loss is 1,50,000 and you have other income. For example, you have business income is 6,50,000. Then this loss can be set off. You will read this set off concept under set off of losses chapter. So your total income will be now 5 lakh rupees and up to 5 lakh there is no tax. So technically you save your taxes with the help of this loss. So this is the welcome step that department says if you have one house property or maximum two house property, the treatment will be annual value always be nil, but you can deduct your current year or 1/5 of PPI if you have housing loan. But this interest value can be maximum 30,000 or 2 lakh rupees as the case may be. The interest maximum can be 30,000 or 2 lakh rupees. When it will be 30,000, the provision says if loan has taken before 1st April 1999, if loan has taken before 1st April 1999, practically you can understand now this situation might be is very rare, because if somebody has taken loan before 1/4/1999, it has been repaid till now. Technically, we can say. Practically, we can say, but technically might be question can be framed like this. So if loan has taken before 1st April 1999, then the maximum interest for current year and 1/5 of PPI, it cannot be more than 30,000. So if the total of 1/5 of PPI and current year is 40,000 and loan is taken before 1/4/1999, then maximum 30,000, 40 or 30, whichever is lower. That means 30,000 can be claimed as reduction. So loss can be maximum 30,000 if loan has taken before 1/4/1999. But if loan has taken on or after 1/4/1999, then deduction can be maximum up to 2 lakh. In place of 30,000, it can be now 2 lakh. If loan has taken from 1st April 1999 or after, and one more condition we need to fulfill, that construction of house property completed within 5 years from the end of financial year loan taken. So if you have constructed your house property within 5 years from the end of the financial year loan taken, then this interest of 30,000 will be replaced and you can claim 2 lakh rupees interest deduction. For example, loan has taken on 1st August 2020. Then it says that your construction must be completed from the end of this financial year. So this financial year will end on 31st March 2021. Now add 5 years in this. So I am talking about 31st March 2026. So if the construction of the house has been completed up to 31st March 26, then the deduction of interest will be up to 2 lakh rupees instead of 30,000. But if the construction is completed after 5 years, then maximum deduction can be only 30,000 rupees. So we can say what case A and B says. Case A and B says that if you have maximum 2 house properties and either both are self-occupied or unoccupied, or one self-occupied, one unoccupied, we can say like anyhow, then the GAV, like first house property and second, then the annual value of both house always be nil. Okay, less standard or statutory deduction 30% always be nil. We are not discussing that if he has 3 houses self-occupied. What will happen if he has 3 houses self-occupied? Might be this is a question running into your brains. It's good. If it is running into your brains is running good. So if you have more than 2 houses, that will be case number C. So we are discussing case A and B, which say maximum 2 house property and both of them is self-occupied or unoccupied, or one self-occupied or one unoccupied. If they are let out, then what? Then this is not the case. That will be case number D. So case A and B just say if you have maximum 2 house property and if both are self-occupied, both are unoccupied, or a mixed combination of one self-occupied and one unoccupied, then how we will solve it? If you have 2, then annual value nil, then we will calculate interest only. That is current year interest and 1/5 of PPI. The total of both of them maximum can be 30,000. We already knew when 30,000, or it can be 2 lakh. depending on the circumstances. Before 1499, after 1499, on or after, plus 5-year construction condition fulfilled. Both conditions should be fulfilled, then 2 lakh, otherwise 30,000. So for example, the total of both of them, 1/5 and current year, for this house is 90,000. And for this house is 1,80,000. And this applicability, we are assuming the applicable limit is 2 lakh rupees. Then again, for both houses, this 30 or 2 lakh limit is applicable. It's not for individual house. Maximum 2 lakh or 30,000 will be claimed, including for those both houses. So now in this case, if we claim this 90,000 out of this house, then for this case, we cannot claim 180. You have paid interest, calculation is 180, but you can only claim now 1,10,000 remaining as your interest because you've already claimed 90,000 in over here. So that will be 1,10,000. Maximum 2 lakh rupees can be claimed as interest deduction in aggregate of both houses. As I always said, whenever we solve the numerical topic theoretically, that always seems quite complicated. But when we will solve this numerical question, we will solve a numerical question also from the study material for this case, then you will find it's so simple. For case A or B, you just need to know how to calculate correct interest. If you are able to calculate the current interest of current year and 1/5 of PPI, then it just a few minute task to solve the whole question because there is no calculation of GAV. You just need to deduct the interest provision and there will be your answer. So we just completed case number A and B. Let me see the queries. Then we will move on to our closure of class today and we will discuss the all other 5 cases because we discussed A and B cases. We have left with C, D, E, F, G. They're very simple. Except F, all are very simple. The main case is F technically. So except that is very simple. So we will discuss those cases in next session. Before completing today's session, let me take the queries first. It is for 5 years, 5 years, 5 years. Okay. Mohammad Vora is saying, sir, please आज notes upload कर देना because revision. बेटा मैंने कल ही notes upload कर दिए हैं सारे, कल ही पोर्टल पे सारे बच्चों को मिल गए. मे बी आप गलत यूज कर रहे हो लिंक एक्सेट्रा. अदरवाइज ये बोर्ड स्टडी की लाइव कोचिंग क्लासेस के पोर्टल पर ऐप पर एप्लीकेबल हैं. मैं कभी भी नोट्स अगले दिन अपलोड नहीं करता. मैं नोट्स हमेशा पहले अपलोड करता हूं जिससे कि बच्चे उसे साथ में देख सकें. सो माय डियर स्टूडेंट्स, मैं कभी ऐसा क्वेश्चन नहीं पूछता जो मैंने पढ़ाया ना हो. मैं कभी नोट्स बाद में अपलोड नहीं करता. मैं नोट्स हमेशा पहले अपलोड करता हूं जिससे कि आप लोग उनके साथ पढ़ पाएं. सो प्लीज गो थ्रू दैट. माइट बी यू आर हैविंग सम प्रॉब्लम विद योर टेक्निकल इश्यू, बट नोट्स ऑलरेडी अपलोडेड हैं. ओके सर, ये 30,000 अमाउंट और repair on house and 2 lakh interest on house. We will discuss about the repair concept and the construction of property. As I've told you that the amount of deduction will be 30,000 or 2 lakh. That is for construction of property. But if loan has been taken for repair and renovation, then it always remain 30,000. There will be no 2 lakh concept will be applicable in that repair and renovation. We will discuss it in our next class because I've just give you a glimpse of case number A and B. We did not discuss this case from the notes. Then we will discuss it from the notes. There is a provision which says in case of interest on renovation repair, it will always remain 30,000, whether before 1499 or after. Just is saying, sir, it's a thing of honor to be your student. It's my honor to be your teacher. We always have been taught that we cannot see our future, but I can see our future. Because you are the future of our country, I have told in the first class. You all are the future of the country. So I can technically interacting with the future of our country. That's the superpower I have, like a moral character, that I can interact with the future. Okay. No sir, नहीं मिले आज वाले. अभिषेक मैंने अपलोड कर दिए हैं. अच्छा फाइन, मैं पूछ लेता हूँ. Students, any one of you got the notes uploaded? Because some students, 1 or 2 students are saying they did not find the notes. सो मेरे हिसाब से मैंने अपलोड कर दिया. आई गेस जिन बच्चों को मिल गया जरा एक बार बता दो, तो मैंने बच्चों को बता दूं दैट नोट्स ऑलरेडी हैव बीन अपलोडेड. ओके, नोट्स आर नॉट एबल टू डाउनलोड. इफ आप डाउनलोड नहीं कर पाए हो, प्लीज कॉन्टैक्ट टू द BOS ऐप और मेल देम बिकॉज आई हैव अपलोडेड. दिस इज कंफर्म, आई हैव अपलोडेड. यस, प्रतिमा गौतम इज सेइंग, लिसन, जिनको नोट्स नहीं मिले सुनो. प्रतिमा इज सेइंग नोट्स आर अपलोडेड इन असाइनमेंट सेक्शन. तो जिनको नहीं मिले हैं, गो टू द असाइनमेंट सेक्शन, यू विल फाइंड द नोट्स. प्लीज थोड़ी मेहनत करो बच्चों, हर चीज थोड़ा ना स्पून फीडिंग होती है. फाइंड इट आउट एंड जस्ट ट्रस्ट कि मैं बिना नोट्स अपलोड किए कभी नहीं पढ़ा था. लास्ट 20 years मैंने जब भी पढ़ाया, व्हेन आई वाज टेकिंग फेस टू फेस क्लासेस, फ्रॉम 2020 आई एम ऑन पोर्टल ऑफ बोर्डर स्टडी. बिफोर दैट आई वाज टेकिंग फेस क्लासेस. ऐसा कभी नहीं होता, कभी भी, नॉट इवन फॉर अ सिंगल डे. आई हैव टॉट थाउजेंड ऑफ स्टूडेंट्स. सो ऐसा कभी नहीं होता कि मैंने बिना नोट्स के कभी भी कहीं भी पढ़ाया हो. मैं तो खुद नहीं पढ़ता बिना नोट्स के, आप लोगों को कैसे पढ़ाऊंगा. सो I always took the printout of even your study, whole study, every chapter. This is the printout of your study material of your ICI. I took the whole study material printout, then I read it myself, then I update my notes, and then I'll submit to you. So please believe in me. Notes हमेशा हैं, please check कर लें आप. Assignment section, okay. Somebody saying I'm Dr. Strange. Yes, that's very good, very good, very good. Not available on app. Assignment section में ध्यानेश please ढूंढ लेना, मिल जाएंगे. Okay, uploaded हो गए. Okay, Ram Bahadur asking, sir, loan was taken on 1st April 17. If construction is completed on 31st March 20, then pre-construction period will be considered as, pre-construction period will be 1st April 2017 till 31st March 19. Only 2 years. Only 2 years will be pre-construction period till 31st March 19. So that 2-year interest by 1/5 will be calculated as pre-construction period interest, and the previous year 1920 interest will fall as current year interest for the purpose of 1920 previous year. Okay, the notes is in download assignment column in BOS app. सुन लीजिए सब लोग, the notes is in download assignment column in BOS app. Okay, so we have too much trust and faith in you. Same is here. Okay, fine. So we are completing our today's session. We will see each other, other of course, not each other, day after tomorrow for our last session, for my last session, income from house property. Till that, please study hard and you will be a CA very, very soon. All the best. God bless you. Take care.